Hey, good afternoon traders. Trader Tim from over at eMiniMine.com doing a trade recap video. Today's Thursday the 13th of May 2021. And before I get into this week's trades, which have been awesome, let's touch on the bigger picture from the daily chart, and then we'll drill down to the intraday time frame. So you can see on my daily ES, we have a 50% retracement that could potentially be coming into play here. It's just the full halfway back from um, the the run up over the last since the end of March. This is where the swing low was at here, end of March, taking it up to the most recent high from last week. So that 50% is about 40.35. 4,000 being the closest big round number would be kind of put us right in between the 50 and the 61.8, a great spot for the market to pull back to. So I'm going to go ahead and get rid of the extension. You can see negative 23 was traded through. Then the negative 61.8 was traded through as well. We've had that on our chart for months now. So finally going to get rid of that one. Here's the uptrend line, also had on our chart for months and months and months. And so getting a nice little pullback that kind of brings us closer to that uptrend line. If I go to the SPY, where we can see the channel that we've been sort of trading in and out of over the last couple of months, we also have a really big extension that sorry, not an extension, but the negative 23 that is from this very large monthly chart. And that's what we're kind of hanging around over the last couple of months. So riding the top of the channel here, a little bit more sideways than we saw in the month of March. April was much more sideways, and then the pullback that we had this week is really just taking us, we're working our way towards the bottom of the channel. So I like this for another buy opportunity for long-term plays. One thing I'll note is that today, we're about an hour left. If we can't cross the high of yesterday, then all we really have today is an inside day, and the likelihood of us going lower is more likely. If we break today's high, we may not go any lower and kind of not make it to this channel, the bottom of the channel down here. If we take a look at the Qs, though, before I do that, let me go back to the daily chart. So on the ES, if I draw from the high to low, we really have not traded at the 50%, the first halfway back short. But the NASDAQ has, and that was a great short opportunity on Friday. I know a lot of you have been talking about this for weeks now. If we broke the swing low, which we did, we have this beautiful double top, and if we broke the swing low, you want to go hard on the short side. Mostly with the idea of being a hedge on the first halfway back short on the daily chart. That traded nicely at Friday at the close. We closed right at that 50%, 334.50. So just buying the 335 or the 334 puts, and then just riding her down. So I ended up closing out half of the position on the 11th, and then the next half of what I had on the 12th, and then I've got the last half of the half to close out here either today in the next hour, or more than likely, since it's such a small portion of the original position, I'll just hang on till the end of the week. So that was a nice, really nice short hedge, and you'll find that the short hedges or buying puts work out a lot better than buying calls, because you have that increase in volatility and the market can drop really fast. So speaking of volatility, if we go to the VIX, you can see that big spike that took us above the swing high here on the 25th. And so if we go to the SPY, this is the swing low of the 25th. And so that's a little bit alarming to see us pop so high on the VIX, but be so far away from this swing low. But if we get a retraction like we've had today, if that continues and we just snap our way back down here to the upper teens, we may not get that follow through to the downside. But that's why the hedge is helpful, because I would rather not have to close out my entire long position than have to pick the bottom to buy it back. I'd rather just hedge it temporarily. So that's been working out really well. And then the intraday. Oh, before I do that, let's just talk about, go to the Bitcoin daily chart because I've had some questions and comments there. If we go look at the daily chart, you'll notice that we did not have an actual close above, this is the Bitcoin futures, a close above the 61.8. And when I'm trading intraday, a 2-tick break of the 61.8 is what I consider a failure when I'm day trading the ES. But on the daily chart, if we look at something like this Bitcoin chart, not being able to close above the 61.8 is pretty bearish. Most of you know I've converted pretty much all of my Bitcoin over to Ethereum over the last couple of months. I got about 10,000 bucks left in my of Bitcoin, but most of it I've converted to Ethereum, and I took half of all my crypto and cashed that in when we made the first run up to about the 55,000 level on Bitcoin. This one I'm willing to ride out since I have so little left, and Ethereum's been doing much, much better, and I think it has a lot more potential long-term use cases. Elon Musk came out and said, Tesla's not going to accept Bitcoin. It's really not a big deal. If you wanted to buy a car with Bitcoin, you'd still have to pay the capital gains tax. So it really wasn't sneaky out for avoiding the taxes. So that really has no implications in my mind. But you can see on the daily chart here that we have come back to the 50% long, and you can see we're definitely sustaining below this uptrend line. So a really long time spent over the last couple of months, between 47 and 57,000. So whereas if you go to Ethereum, much more of a kind of straight up trajectory. So this one could be, coming back a little bit as well. But like I said, since I've already cashed in half of the position from the initial exponential run up, I'm just going to ride this wave out. All right, so let's get to the intraday stuff. Really, really good week this week. Tuesday, a couple big trades. Wednesday, another couple trades. I didn't have anything today. I wasn't able to get, we really didn't get a pullback today on the 5-minute early on to get some sort of retracement entry. I was looking at possibly taking a breakout, but nothing really screamed at me. So didn't have any trades today, but let's go back to Tuesday real quick. Tuesday you can see the morning session, the live trading session over in the VIP dashboard for those of you that are subscribed there. And let's go review that really quick. So 5:12 morning. First one was about 22 minutes after the bell, which my time is 6:52, and that was a long. Let's see, was that a long? Oh, 5:11. That's why. All right, 5:11, 6:52, and that was here. This little long of mine. All right, so we've got here's the chart on the 11th. This is what the 5-minute looked like, drawing the low to high. And let me sync these charts together. So this is what the 5-minute chart looked like. And then we broke the opposing short. See how we broke the 61.8? And in this case, 5:12, I'm not really concerned about closing above it. I just want us to break it by 2 ticks. Whereas on the daily chart, if we can't close above the 61.8, if we keep falling back down, in the case of a short, it shows a little bit more sign of weakness. So let's go here, first micro after the 5-minute. that was drawn over here that you can also see in the 512, and that was the entry 41. Let's see. So this one, how did it play out? The first one I didn't take. I ended up taking the second one, and it was only because I missed it. So this would have been the better entry at 38, and I was just looking at the questions or doing something where I just missed it, didn't have my order in time, so I just took the next one. So this would be the first micro after the 5 minute, and then here's the second micro after the 5 minute. So I took that one at 31.40, so an extra 2 points higher was my entry. But this guy ran really nice and just trailed the next 61.8, and then we started ripping, and then trailed the let's see, this one, let me get my exact exit, was a 41.52 is where I got out. So we ran up, trailed the swing low, ran up again. 41.52 was right here. This is the swing low that took me out right about that point. And then the next one ended up being a short. That was 724. 724. That was this guy here. Like that. And same thing. The 5 minute traded first, like that. This is the 5 minute. We broke the opposing, in this case, long. Broke the opposing long, and then rallied into the short 41.39.75. I just used a tick below, and then this one just dropped like a rock, and so there really was no swing high to trail, so I just had to trail the individual candles as best I could, and that one I got out at 27, which was right down here, and that one was also good for another 15 points. So per contract you're talking about 30 points on the day, which was really nice, because the last couple of weeks I haven't been super active with the ES. Just there hasn't been as much because we've been kind of moving sideways with some a lot more chop. So that was Tuesday. Then Wednesday, the first trade just got a small run. Let's go. Let's see. Scroll forward. Here we go. 12th. The first one was 43 minutes after the bell, so 7:13 Pacific, and that one was a short. So Wednesday, the first 20, really the first 30 minutes were pretty blah. We had these, we had a failure to the long side and then a failure to the short side. So I drew up the top and bottom of the first 30-minute range, like this, and I just stayed out of that mess until we broke. Here's the top of the hour, and then we broke below, and that's what's set up in our halfway back short. And so the breadth, the other note I have here, breadth was really bearish yesterday, and so we were like this. Here's the bottom of the first 30-minute range, and I like when the 50% lines up with that. But because we were pretty bearish in the breadth and we gapped down, I felt that we were good enough to go short, and that one was drawn up like this, I believe. Yes, because I waited for the break of the opposing. So we traded at the short. Then I keep talking about this opposing setup. That just means draw up the long. So draw up the low to high. It traded off of that, so I waited for the 61.8 to break over here, and then drew up the short and took that here. That one came down, got a first target of 3 points, trailed the 61.8 because we made this double bottom. That's where I got taken out. So that was like, if you reduce it down to 2 contracts, that was 3.5 points. And then the next one was the other 16 pointer. It was basically the same scenario. We traded back up at the 50%, and the breadth was even more bearish at this point. So drawing again the opposing long, and the breadth and advanced decline line, when we're sitting in like minus 2,000 or minus 2,500, and the breadth is -5, -8. Those are really bearish numbers, and it's hard to turn around, especially when we are 30, 45 an hour into the day. And so, not to be super stubborn, but signs were pointing to the downside. We have a bit of a bear flag where we move down, and then we sort of bear flag or kind of rising channel, if you will, and we were right at the bottom of the first 30-minute range. So this one was at 724. Drew it up like, let's see, nope, not there. How did I draw this one up? Let's see, at bottom of first 30-minute, negative breadth, right? Okay, so I drew up the opposing, and oh, that's right. So see how I draw up the long in this case, and see how this low point is still a point away from the opposing long, but we broke the swing low back here, or you can consider the swing low up here. So taking the short like this is just fine. What I don't want is us to stop right at the long. So we either have to stop short or break through it the 61.8. And so taking the short like that is how I played it. And then that one dropped pretty hard pretty quick. And just by trailing swings, this one was 41.02. So trailing the swing highs by a couple of ticks. We rolled over. So if you trailed this little one candle swing high by a tick, you may get taken out here. We traded up. It's a 925 and 875 was the high here. So if you just did one tick, you may have gotten popped there. If you trailed the next 61.8, that would be fine to keep you in, and then kind of went another leg lower, and so you could either switch to trailing each candle's high, or use the swing high. But once you start to get like this point up here, 41.09, this is 4,100. That's 9 points. You really want to get your stop down lower to lock in the gains. At the start of the trade, I'm okay with being a little more conservative, giving it some wiggle room before tightening my stop. Let that first target get hit, or break the anchor point down here. But like if we're only 2 ticks or 3 ticks in the green, I'm not going to tighten my stop to break even. I want us to break the swing low and get some momentum. And then we can start tightening our stop and trailing it down. So that was another good one. And then a little bit later in the day, there was another short that set up as well, and that pretty much took us down the rest of the day. So pretty good week so far. We'll see what tomorrow brings. And if you have questions, feel free to drop them in the comments below. I hope everyone has a great week, rest of your week, and we'll talk to you all soon.